Okay, let's go in details now. Before you go, how they're planning to do, let's explain for people who doesn't know how banking system is operating now in Europe and why this system is still functioning because of this decentralization and lots of banks. But things will change in the future. Can you tell us how?
Yes, exactly. So you're right. We need to understand how does our current system that we've actually benefited from because it's created a lot of prosperity in Europe, how does this system really work? And in a nutshell, you could ask, well, how does capitalism, Western capitalism, actually work? Normally, when things go well, of course, there's many examples when things go wrong, but when it goes well, in a nutshell, what happens is for economic growth, economic growth means more transactions this year than last year. You need more money to pay for these more transactions this year than last year. And in our system, that means more money has to be created and injected for those who make productive use of it in the new investment, producing goods and services. So the next question becomes, where does this money come from? Where does money come from? Now, most people think, well, money comes maybe from the government or maybe from the central bank. But the truth is, governments don't create money. The last European leader who tried to do this was in Italy, Aldo Moro, and he got assassinated. But that's another story. Of course, in the US, John F. Kennedy tried to do this in 1963, which turned out to be the last year of his life. So governments presently do not create money. But what about central banks? Surely they create the money supply. It turns out that central banks only create around 3% of the money supply. So who creates more than 90% of the money supply? It's actually the banks. And this is where there's a lot of confusion because the economics textbooks and the economics profession, the academic economists and also many economists working for central banks, they perpetuated for decades a wrong understanding of this issue because there was no interest in people understanding how the system works. So they've been saying, oh, banks, they're not important. We don't need to include banks in our economic analysis. Banks just gather deposits, do the analysis, and then lend out to particular companies. So they just rechannel the existing money. So they don't create money. Well, but then where does the money supply come from? Because it's not the central bank. So this theory, which is in all the textbooks and is still the mainstream understanding, is wrong. Banks don't gather deposits and then lend the money. They actually create credit. They give loans, and they do this by creating the deposits. When a loan is given out, deposits are created. I did the first empirical tests on this, which people can look up. Can banks individually create money out of nothing? If you Google that, or if you Google lost century in economics, perhaps with my surname Werner, you will also get the second paper, these two papers, which is the empirical proof that banks create money when they give out a loan. And that system actually has been quite good in Europe, because we've had many, many small banks, particularly in countries like Germany, Austria, Switzerland, Italy, many small banks, local banks, savings banks, credit unions. And that means actually it's been a very decentralized system. The opposite of a Soviet central planning system, the opposite is a decentralized system with many banks creating money. The Soviet system had one bank, Gosbank, creating all the money, making all the decisions in a centralized top-down fashion, very inefficient and disastrous. It's much more efficient to have thousands of small local banks in your local area, in your local town, your local village. They meet the local small firms, they do the analysis, they know them better, there's trust, mutual trust, they can make better decisions, and they create the money. They also can't do the horrible projects that destroy the local environment because the local bankers live with the local people and they will not want to be the bad guys doing bad things to their fellow citizens. That's how accountability works locally. And that system has actually created in the last 200 years the prosperity we've enjoyed in most of Europe, particularly, of course, in Western Europe, during the Cold War era. And that's how the system works. Now we have people like von der Leyen and the German Chancellor in spe, wannabe chancellor, saying that, we have these savings lying around, idle savings, and why don't we take those and use them? Now, I believe this idea was given to them. They clearly, when you read, they don't understand the financial system. Ursula von der Leyen is a gynecologist. And yeah, of course, there's many clever medical doctors that have found out about the economy and know about the economy, but maybe that's not the case in her case. So they were told these stories, and to them it seems plausible. There's the figures. We have total deposits in banks is in the trillions. Wow. Oh, so let's just take the money. The truth is, it was created by banks in the process of credit creation, and of course, the banks did this when they invested already. So the money has been invested. The deposits are just a side product, byproduct of that. If you want to take them, you are smashing the banking system. Maybe that's the plan. And you're also, of course, probably going to violate property rights, which we have to talk about when we talk about the detailed plans, how they're going to do this. But so the first point is that this seems to be a complete misunderstanding of how banks work, but perhaps it's on purpose, because the policies they're going to advocate will likely damage the banking system and likely damage our prosperity and perhaps quite directly our savings, our bank deposits may be expropriated. So, but just to remind people, so therefore, how does the system work? It works by banks creating credit for productive business investment that delivers new goods and services that have a higher value added, that creates jobs and prosperity. So it's very important what type of banks we have and who they lend to. If banks create credit for consumption, that's not good. That gives consumer inflation because you suddenly have more demand, but you haven't created goods and services. If you have bank credit for property speculation, for buying assets, real estate, financial assets, that's also no good, because bank credit is money creation, it's a public good, and you're just going to create asset inflation that seems to make people wealthier, but it's a Ponzi scheme and will create a banking crisis and is a waste of resources and misallocation of resources. But central banks in the last 30 years or a bit more have actually switched and have encouraged banks to switch credit creation away from productive business investment more and more for asset purchases, which is bad central banking policy. It's bad for us. Maybe it's good for what they have in mind, but it's very bad for the general population. So economic growth has been going down, and there's more and more inflationary pressure, asset price inflation, consumer price inflation. So really, instead of talking about big schemes and radical, crazy new ideas and communist ideas, we should first of all hold our economic decision makers to account. They have been misallocating resources. The regulators, the ECB in particular, have been giving the wrong incentives to banks to move bank credit away from productive business investment lending to inflationary consumer and asset inflation lending in the property and financial sector. And that's a bad policy. But what's now happening is that these policies the policies that are being discussed and not yet spelled out in great detail, seem designed to move a step further to damage our prosperity. And by the way, actually, we should briefly reflect on this question. How can it be that for many decades we've had policy mistakes? When I started my research as a young doctoral student at Oxford, I went to Japan. I studied what the central bank was doing in the early 90s in Japan. And I came to the conclusion, they made a silly mistake in creating an asset bubble, and now they're creating a banking crisis. I just need to tell them what to do, and they will quickly correct their mistake. No, they didn't. They understood very well what I was saying. They did not want to correct the mistake, because it turned out, as they also would tell me privately, they want the crisis. They want to bring down the banking system. They want to create less and less growth. It's a policy of intentional destruction of wealth and reducing living standards and reducing economic growth. Now then, for a while I thought, this is the crazy Japanese. But it turns out the ECB had the same policies. And then if you study the history, this is really what central banks have been doing since the 1970s. Certainly Western central banks, and we're talking about Western Europe, we're talking about the US and other countries in the sphere of influence of the US, in the US empire, if you wanted. Of course, Japan and Korea are part of that. The same policies were introduced where you reduce economic growth and you enrich a small elite, but you're destroying the middle class. And that's why, of course, we have to be aware of this, and we have to be very critical and stand up. And we have to stop these policies. And now what's happening seems to be a more direct assault on the middle class, on our savings.